Good morning, dears, and welcome to Super Coaching for UPSC by Textbook. And really sorry to delay this session. And today we meet here to discuss one of the very important topic of Indian economy. But before that, let me ask you a question: that have you ever listened the word neobank? And do you know what is the meaning of neobank? And how the neobank are different from the traditional banks? And in today's session, we are going to discuss all these things. So first we will try to understand that what is the meaning of neobank, and then we will discuss that what is the difference of neobank in terms of traditional bank. So let's start our session, and I think all are there. Let's connect little fast so that we can start our session. And the thing is, so let's start our session. Times it is there, don't worry. Okay, times it is there, don't worry. And really sorry for 2 days little delay, really sorry for little delay, but it is there and we are going to start. So the thing is, today have you ever listened about neobank? And today we are going to discuss the neobank. So what is the meaning of neobank? When we talk about the neobank, it is nothing but a digital bank that does not have the physical branch. It is entirely online. That neobank is something which is digital bank. Neobank is digital bank. Neobank is digital bank, and it does not have any branch, and it is entirely online. So that means something which is completely online and that do not have any physical presence. Okay, that do not have any bricks and mortar, that is known as neobank. That although that means that the traditional banks are also providing the digital facility, they are also providing mobile banking facility, but that how the neobank is different from the digital banks, it is different in terms of that traditional banks have the physical presence, it have the branches, and they have the branches, that means they have the physical presence as well as they have the that means digital presence, that means they are providing the mobile facility. Whereas neobank is completely online. It only provides the that means banking services online only. So that is nothing but fintech. We can say that neobank is nothing but fintech firm. What is the meaning of fintech firm? Like textbook is a edutech. Textbook is a edutech, means we are providing the educational facility by using technology, and that is online digitally. That means we are providing educational facility digitally by giving you people that means that online facility. Similarly, fintech, that neobank is fintech, meaning it provides the that means financial services. It provides the financial services by using technology. That means they do not have any physical presence, they do not have any branches. Whatever service they provide, they completely provide online by mobile banking. Okay, so that is a fintech firm. Okay, they do not have their that, and be very clear that they may ask, the UPSC may ask that they are not having any license from RBI, that RBI has not provided the bank license to the neobanks. And this is the RBI who regulates the banks in India. That RBI is the apex that institution who has the responsibility to regulate the banking system in India. So the be very clear that these neobanks are not regulated, or that means they do not have the license from the RBI. Then how they are how it is possible for them to do the business? That's the question. That means they are taking the services, that means they are being associated with the traditional banks. That means, because be very clear that that RBI, as per the RBI guidelines, banks to be 100% digitally. Okay, that means these firms do not have the bank's license of their own. Be very clear, these firms do not have the banking license of their own. They rely on the bank's partners. bank partners to offer the license services. Okay, so because that as per the RBI guidelines that complete digitalization is not possible for the banking services, that's why the RBI has not provided the banking licenses to these neobanks, but they are doing banking services with the help of the partners by being associated with the traditional banks or by being associated with the NBFCs who is being regulated by RBI. So that is the meaning of neobank. Okay, and that means neobank is that means entered in the market with the tagline challenger banks. They entered in the market with the tagline challenger banks because, and that's why it is considered to be that it is instrumental for more and more financial inclusion. We will discuss. So that means because what is why that means they do not have the complex infrastructure, because they do not have the bricks and mortar presence, that do not have the physical presence, they do not have the branches. That's why their infrastructure, there is no need to have the that means bricks and mortar infrastructure, that is complex infrastructure. They have the clients on board. Okay, and that means and that's why if we talk about the examples, there is Jupiter is the example of neobank, Roger Pay is the example of neobank, and Neo is the example of neobank, Open is the example of neobank. So these are the neobanks. So let me summarize it once again. Whosoever has joined it little late, little late, let me explain for those people what I want to say. That neobank, first I started my session with the asking a question that what is neobank and how neobanks are different from traditional banks. So neobank is the banks which provides the banking services online. They are completely online banking services. So that is, they do not have any physical infrastructure. Okay, physical infrastructure or physical presence. The thing is, and that's why they are known as fintech firm, because fintech firm means they are providing financial services with the help of technology. That's why they are known as fintech firm. Okay, like edutech, we are edutech, that textbook is a edutech. So that means we are providing educational facility by using technology. That's why that we are known as edutech firm. Similarly, that neobank is providing banking services by using technology. That's why they are known as fintech. So that means, and and as per the RBI guidelines, that fintech or that means neobank are not having any license from the RBI, and RBI is the apex institution who is instrumental for regulating the banking services in India. So how they are running the facility for banking? That means they are doing the partnership with the traditional banks or with the non-banking financial institutions, and with the help of those that means a partnership, they are providing the banking services. They are providing the deposit facility, they are providing the credit facility, they are providing lending facility. So all types of facility they are providing, but they do not have any license from the RBI. Be very clear, this is the keyword. This is the keyword, because that means they may ask that they have the license from the RBI. They do not have the license from RBI. They run their business with the license of the partner banks. Okay, and that may be NBFC or that may be any traditional bank. And this is in the news because of the Paytm, that RBI has that means that in the position to cancel the license of payment bank, that is Paytm, and that's why there is one option for the Paytm to have the neobank. Okay, to start a neobank. So that's why it is in the news, and that's why we are discussing it. Now let's start that what is the traditional. Okay, how the neobank is different from the traditional banks. How neobanks are different from the traditional banks? When we talk about the service platforms, the traditional banks, there is physical presence, as we talked about. There is physical presence in case of that means they are providing the physical services, as I talked about. That how these are different. Let me clear first it. Okay, so that means I depict it with the picture. So that means that when we talk about the traditional banks are having the physical presence as well as digital presence. They are having the physical presence as well as digital bank, presence, that is known as digital banking. Whereas neobank is completely digital. They are completely digital. So they do not have any physical presence. They do not have any physical presence. That is the okay. So that means when we talk about the traditional banks, they have the physical presence, whereas they do not have the physical presence. The whatever service they are providing services through the web, that is portal, or through the mobile banking, through the mobile services. When we talk about the market entry, that means the traditional banks are having the market entry more than 100 years ago. Okay, that means the history of the traditional bank is as old as 100 years. Whereas when we talk about the history of the neo bank, it is that means very recent one, and that is 10 years before only. That means the neobank started their business 10 years before only. 10 years before only. When we talk about the market, that means client relationship. When we talk about the client relationship in terms of the traditional banks and in terms of the neobank, that means the client relationship for the traditional banks is long term. They are in person, because when you want to open or you want to take any facility from the traditional banks, what you have to do, you have to visit the branch of the traditional banks in person, or you have to take the mobile facility, mobile banking facility, or online net banking. Okay, so that means with minor changes, that minor changes may be mobile banking services or online services. Okay, whereas when we talk about the client relationship, it is completely flexible. Meaning flexible means it is completely virtual only, easy to modify. Okay, that means they are providing that services as we talked about through the web or through the mobile services. So mobile banking, that's why it is completely virtual, that means digital, and this is the basic definition of neobank. So that is the difference. When we talk about the customer support, that means they are providing support in person. Traditional banks are providing in person support, they are providing phone support, and they are also providing online support. Whereas when we talk about the that means how the neobanks are providing the support, they are providing support only either online only through the phones, okay, or through online only, through the phones or through the online only. When we talk about the fee, that the fee, that means they are charging high fee. Okay, the traditional banks are asking to maintain for the account, they are asking too much fee. Okay, and that is also the complex structure is also complex. There is no transparency, that why they are charging this fee, that fee. Okay, whereas in case of neobank, that means they are not charging, that means there is no need to maintain minimum account. Whereas in case of traditional banks, you have to maintain the minimum balance, but in case of neobanks, you have not to maintain any minimum balance. So that means and the fee, that means for maintenance, and there is complete transparency. If they are going to charge any fee, they are going to explain that why they have deducted this fee. Okay, so there is complete transparency as well. When we talk about the banking license, that means that traditional banks run on the banking license, that means through the banking license only. Whereas that there is no banking license, or that means they are running through their partners. So that means they are running the business activity through the license of their partners, and there is that is partial. Either it is partial, means they are running, they have made the partnership with the non-banking financial companies, or through the traditional with the traditional banks. And that is when we talk about the bank officials, that means the traditional banks have the bank officials because they are providing in person that means facility. And when we talk about the neobank, there is that means there is no bank officials. That's why the cost of running for the neobank is very low. Okay, that's why it is going to be very feasible. This the business model is going to be feasible, and it is going to be instrumental for financial inclusion, because that running cost of neobank is very low in comparison to traditional banks. In comparison to traditional bank, the running cost of neobank is very less. Why? Because they do not need to have any banking officials. They do not have the physical presence, bricks and mortar. There is no cost attached to the running the office, etc. Okay, that's why that is going to be comparatively low. Okay, and when we talk about the configuration process, that means that it takes for opening the account or for resolving the issues. That means in the traditional banks it take little more time in comparison to neobank, and there is instant resolution of your queries. There is instant resolution of your query when it is in case of neobanks. So that is the differences between the traditional banks and neobanks. The meaning is the neobank are providing all the facility which is being provided by the traditional banks, but they are at low cost. They are providing those facility at low cost. Okay, and that's why it is considered to be more feasible business model in comparison to traditional banks. That's why it is considered to be that it is going to be instrumental for financial inclusion, although we have to accept it that it can never be the part of that means substitute for the traditional banks, but it can be a additional mechanism to do the financial inclusion in India. And when there will be financial inclusion in India, that the value of money multiplier is going to increase. The value of money multiplier N is going to increase, and this that means when the value of money multiplier is going to increase, that means it is going to increase our production capacity. When the production capacity is going to increase, because we will have the more resources, there will be more money supply in the economy without printing a new currency. So that means it will be instrumental for increasing the production capacity. When the production capacity will increase, that means the employment rate will increase. When the employment rate will increase, that means because of that poverty will reduce. When the poverty will reduce, that means there will be increase in the economic growth, and that because of increase in production, there will be increase in GDP. Okay, so that's why it is considered to be more viable, more feasible business model, because the running cost of neobank is very low in comparison to traditional bank. But there is, we will discuss the issues as well. That is nothing but challenges. What are the challenges before the that means neobanks? There is trust deficit. Okay, and other things, but the thing is, it is very instrumental for financial inclusion, although we have to accept this, that they cannot be substitute for the traditional banks, but there can be an additional that means mechanism for the financial inclusion. And because of the financial inclusion, there can be increase in the value of money multiplier. When there will be increase in the value of money multiplier, it will be instrumental for that means more liquidity, more money supply in the economy without printing a new currency, because the value of money multiplier in case of India is only 8. Okay, that means money supply is nothing but, let me explain it, money supply is nothing but m into m0. M0 is nothing but value of money multiplier, and small m is nothing but money multiplier. M0 is nothing but reserve money. Reserve money is something which is being printed by RBI. Okay, which is being printed by RBI. So that means money supply, this is instrumental. This is nothing but resources, which is the total money for the production activity, total capital in the economy. So that means this is going to increase either with the increase of this or because of the increase of this. When the RBI is going to increase the value of reserve money or the M0, that is going to increase printing of new currency. When there is going to be printing of new currency, that means that is going to increase the inflation in the economy. So other measure to increase the value of money supply without increasing the value of reserve money is just to increase the value of money multiplier. And for increasing the value of money multiplier, there is need to have the financial inclusion in the economy. So this is going to be instrumental for the financial inclusion in the economy. That's why it will increase the value of money supply in the economy. And when there will be extra resources in the economy, then it will be that means will increase the production capacity, and because of increase in production capacity, the real GDP or the value of GDP will increase. And because in order to produce more, the employment rate will increase, and when there will be increase in employment rate, poverty will decrease and other things. That is known as virtual cycle. Okay. So the thing is, and when we talk about the value of money multiplier in case of India, it is only 8, whereas world average is 60. World average is 60, and in case of developed economy, it is as high as 100. It is as high as 100. That means when they print only 1 rupees of one currency, one note of currency, that may be dollar or that may be rupee, that means the money supply increase to 100. And when we print 1 rupees, that money supply increase to only 8. Okay, so this is the difference. And when this is going to be, there is going to be financial inclusion. More and more people are going to be in the banking net. Okay, we will discuss that how it will be, and I have discussed in the YouTube session itself when I was discussing the when I was discussing the money supply. So that means this is very important, and with this it will increase this can be one of the mechanisms to increase the value of money supply, money multiplier. So this is the thing. And now let's discuss that what are the initiative that has boosted the neobank. Be very clear that neobank do not have any their registration. Okay, that means they do not run their business on their own registration. They run the business on the registration of their partner. Be very clear. So that means what are the initiative which has been instrumental, for that means boosting the neo banking services. That must is what the first time in by the Niti Aayog in 2021. Niti Aayog in 2021 proposed to set up a full stack digital banks. Okay, and laid out the made roadmap for licensing and regulatory mechanism for neobank. Okay, so that means this was the Niti Aayog proposal. This was the Niti Aayog proposal in 2021 to have the mechanism to have the digital banking services. Okay, and for that they are that means taking feasibility for mechanism, regulatory mechanism, and for the that means for licensing as well. And initially RBI was very much conceptualized on the group of digital lending. Okay, they were concerned about the digital banking. That means, but in 2022, in the budget of 2022, that means government did digital banking units. Okay, rules have been recently introduced. That means in budget 2022, the government announced the digital banking unit rules. And through those rules, it is motivating RBI to have the mechanism, regulatory mechanism, and to provide the license for the banks who run their business completely in digital domain. That is completely through the fintech. Now they are running. Neobank is also a fintech, but they are running the business on the behalf of the license of their partner. But this digital banking rules, digital banking unit rules has been that means announced by the finance minister in 2022 budget. Okay, that's why it is motivating the RBI to think about the initiative to regulate the that means to regulate the mechanism for the that means neobank or digital banks completely, and to have the license for them. And that means we are motivated from the experience of other countries like US, like many Asian economies as well. That means in Singapore, in China, in Malaysia, in Hong Kong, etc. They have adopted the digital banking licensing regime. They have already implemented the digital banking licensing regime. Okay, that means that's why the RBI is also motivated, and they are also talking about the feasibility to do the that means regulation of these digital banks, and just allow them to run the business activity on their own licenses. Okay, and for that these measures has been taken. These measures are in the public domain, and on these measures the that means there is that means feasibility, there is that possibility to run these measures. Okay, so now we are going to proceed further. When we talk about the pros of the new banks, as we talked about, there is low cost, we already discussed. That means there is no cost of the bricks and mortar, because they do not have any physical presence. Since they do not have any physical presence, so they need not to run that means the bricks and mortar office, and they need not to pay the salary for their banking officials. There is going to be very limited staff, and that is going to run the services online, and that can be outsourced as well. So that means because of that it is going to be low cost, and because of that it is going to be feasible model. It is going to cost that means it is going to, once there is going to be digital literacy in India, it is going to be very feasible model, because it is going to reduce the cost almost 1/10. Okay, so that is going to be that low cost. It is going to be convenience, and that means there is going to be convenience and there is going to be low cost only when there is going to be digital literacy. The biggest challenge before the neobank is, digital illiteracy. Okay, that means there is only, that means as per the data of 2020, there is only 54% penetration of smartphones. So they can have their business for this 54% population only. And lot many people, lot many individuals, they are not very much comfortable with the digital banking, digital services. Okay, because of lot many issues, trust deficit, etc. So that means all these are going to be only when there is going to be digital literacy. So that means it is going to have low cost, there is going to be convenience, and they are going to do the things speedily. Okay, that means as I talked about, they can resolve your issue instantly wherever, whereas in case of traditional banks, there is going to be long. Okay, time is going to be long and it is going to be complex, and there is going to be transparency, as we discussed already, that in case of the, that means when they are charging the fee, traditional banks are charging the fee, there is no transparency that why they have deducted this much fee. And that is also complex. When we talk about the neo banks, there is completely transparency that why they have deducted this fees, and they are going to deduct very low fee, and top of that there is going to be transparency, and there is deep insights. Okay, the most of neobanks provide the dashboards. Okay, that means they are going to provide the dashboard, like when you enroll in the paid courses, that means the edutechs are also providing you pupils the dashboard. On those through that dashboard you can resolve all your queries, and you can directly contact to the that means staff with the edutechs, and they can resolve your queries or issues instantly. Similarly, here also they are going to provide the dashboard, and this dashboard is instrumental for resolving your problems instantly. So that is the having the deep insight, and it is going to increase the credit worthiness of fintechs. It is going to increase the credit worthiness of the banking services, okay, provided by that means neobanks or digital banks. So now when we talk about the challenges, that what are the challenges before the neobanks, the biggest challenge, as I talked about, is the digital literacy. About the digital literacy, okay, this is the biggest challenge that that many individuals in India is not comfortable to do the digital, to take digital services or to do the transaction digitally. They are not very much comfortable. They are not very much comfortable because of their non-exposure. Because of their non-exposure, they are not comfortable for digital services. That's why there is we can say that digital illiteracy in case of India. Okay, and another thing is mobile penetration. As I talked about, there is only 54% as per the data of 2020. As per the data of 2020, there is only 54% penetration of smartphones. There is only 54% penetration of mobile phones. So that means they are aware about the digital services or digital facilities. So that means their potential client, neobank's potential client can only be this 54% population, not 100% population. So there is need to, and this mobile penetration is going to be when there is going to be digital literacy. When there is going to be digital literacy, this mobile penetration is going to increase, or the smartphone penetration is going to increase. So that means there is going to be service offers. When we talk about, as I talked about, that they are not running the business on their own, that means license, they are running the business on the license of their partner. So that means these banks or neo banks are running their business on their license of their partner. Since they are running business on the license of their partner, because of that they are not able to provide all the banking services which is being provided by the traditional banks. They are providing certain services only. Okay, and if they are providing the all the services, they are providing with the help of the partner, and there is lot many time issue with the that means dependence. And that's why I use the another challenge, that is nothing but dependence on other, because they are running the business activities on the license of others or the license of their partner. That partner may be non-banking financial companies or institution, that may be traditional banks. So that means they are not able to provide all the services. They cannot offer all the services, and there is issue of the building the trust. Okay, that means that especially the rural people, they are not having easy trust on online services. They still believe that means that public sector undertakings or public sector banks are more reliable, or they have more trust in the public sector banks. Even they do not have the trust in the public that private banks as they have the trust in that public sector banks. So that means, and forgot about the digital banks. Okay, so that means there is trust issue as well. Okay, if they do not have the presence of the banks, how they can trust? There is issue with the, that means not that much literate people to have how they can deposit their funds, how the lending facility is going to take place. So they are going to provide the lending facility with their partners, that may be non-banking financial company, or that may be traditional banks, whatever it may be. And there is regulatory hurdles, as I talked about, that the RBI has not provided them license. So there is issues with the regulation. So they are running their business with the license of partners. So that means as per 2014, there the 100% digital is not possible as per the RBI guidelines. That's why they are running the business as per the license of their partner. Okay, and that's why, since they are running the business with the license of their partner, because of that there is dependence on other banking financial institution, that may be non-banking financial institution, that may be that additional banks. And these non-banking financial institutions are regulated by three institutions that is being regulated by RBI. Some non-banking financial institutions are regulated by RBI, some are regulated by SEBI, some are regulated by IRDA, Insurance Regulatory Development Authority of India. Insurance Regulatory Development Authority of India. That's why there is multiple regulation of these financial non-banking financial companies. And many times these neo banks are running their business with the license of these non-banking financial companies. And this there is multiple regulators of these non-banking financial companies. Their RBI is also regulating non-banking financial companies, we will discuss. And the SEBI is also regulating non-banking financial companies. And in certain cases the Insurance Regulatory Development Authority of India is also regulating these financial non-banking financial companies. So this is also the issues. So now when we discuss the others, we can discuss that what can be the solution or the way forward. As I talked about then this can be the best mechanism for the financial inclusion. That means, as I talked about, this can be the best mechanism for financial services with other financial services. That may be, for example, opening a bank account, because it can open the bank account instantly. That opening the bank account for immigrants, facilitating through new onboards procedures, when there is going to be all the, that means it is nothing but financial inclusion. It will be instrumental for financial inclusion. That means, what is the meaning of financial inclusion? That means more and more individuals should be under the net of banking services. When this is going to be, because the value of money multiplier depends upon two things. The one is banking habit among the pupils. Other is the monetary policy of RBI, especially in context to CRR and SLR and CRR. So that means, that how the value of money multiplier is going to increase, because of the increase in the banking habit. When there is going to be more and more financial inclusion, meaning the banking habit among the pupils are going to increase. When there will be more and more banking habits among the people, that the value of money multiplier is going to increase. And when value of multiplier, we discussed already that there is going to be virtual cycle effect. So that is going to increase our production capacity. So it can be instrumental for financial inclusion or giving the financial services. Okay, although we have to accept that digital or neobanks are the gathering momentum, most yet show sustained profitability. That means they are showing the sustained profitability. Nevertheless, be very clear, they have great potential to be disruptive in the banking and the financial services. A key towards becoming a profitable entities would be convince traditional banks. Okay, so this is all about our today's session. If there is any doubt, let me know. As I talked about, that this is going to be instrumental for financial inclusion. That neobank is going to be an important mechanism or platform for the financial inclusion. Because of that, what is going to be, there is going to be increase in value of money multiplier. Because of that, production capacity is going to increase. And this is all about our today's session. If there is any doubt, let me know. Otherwise, we stop here only. And to get the PDF of this session and to connect with me, just join my Telegram ID. This is my Telegram ID. And let me remind you that tomorrow we are going to discuss the Ramesh Singh, objective questions of Ramesh Singh. As I talked about, that at least we will have the 2 day session on the Ramesh Singh, and I am discussing the separate topics on my master class. So whosoever, this is also free. You have to download the app of textbook. You have to download the app of textbook, and you can avail the facility of that means this free class as well, that is known as master class. You can take the facility, you can take the advantage of this facility. That in the master class I am discussing different topic, and that is also free. Only thing is, you have to download this textbook, okay, app, and you can avail that facility as well. So in order to get the PDF, you have to join this Telegram ID, and you can resolve all your queries on this Telegram ID. Thank you very much, dears. Thanks a lot. If there is any doubt, let me know. Otherwise, we stop here. If there is any doubt, let me know. Otherwise, we stop here. Is there any doubt? Can we stop here? Thank you very much, dears. Thanks a lot. We stop here.